Trading is all about experience. It's to feel the adrenaline running through our veins. Like all the things we do that excite us. Whatever world we come from or live in, there are people that are born to succeed. They're called special, to hustle every day for an opportunity of a lifetime. Looking for the challenge to shape our future is something that's in our DNA. A privilege just available for a few. Traders, we see things differently, paying attention to every small detail that would maybe go unnoticed by the common eye. On or by the edge is our playground, with a constant strive for glory, seeking for a new tomorrow. Do you feel special? Take back control of your investments.
Good afternoon.
Kurwa.
Yeah.
How you doing?
Fine, brother. Fine, thank you. Everything is done with FTMO, and maybe I placed my first trade in the real account today. Maybe.
Are you allowed to trade around news?
Maybe, Thomas.
You don't know.
Maybe get an opportunity. Why not?
But you must check the rules if your account
No, I have a
allows you.
swing account, brother. I had a swing account.
Okay.
I'm allowed to hold the positions overnight and to trade news. That was very important for me because we trade a lot in the live sessions, Tamas.
Absolutely. I mean, that's where we make all the cheddar in it.
Yes.
Or the moolah.
Yes. You know, no money, no funny. No money, no bonani. Yes.
Exactly. So, gold is just not stopping. Many reasons to that. First of all, yields are retracing now below the year-to-date average. So the year-to-date high. So if you look at on the screen, you can see that clearly. There was a bit of a peak above the year-to-date high. It was going on for a week or a couple of weeks, and now it's back below the year-to-date high. And if you look at the structure, what does it tell you? Who can tell me what do you see in the 2-year Treasury bond yield chart in terms of monetary policy? Adrian?
I'm not sure. We have rising yields over the last 3 or 4 months.
Well, for quite a long time, even longer.
Yeah.
For the past 1 year and 10 months. So 22 months. But the yields are representing the risk premium that investors want, and also the interest rate expectation. And yesterday there was an inflation data which was very inflationary, and yet yields didn't rise. So that tells me one thing: the market shook off the inflationary data because they think that the Fed is about to pivot. The Fed is about to pivot because first of all, they haven't raised interest rate for the last 2 or 3 sessions, or FOMC meeting if I'm correct, but I might be wrong, don't quote me on this. But the other thing is that the bulls are really taking over on the gold market. You can see, of course, the war has a big part on this, but the other thing is that I think personally that the market shook off the inflationary data yesterday, and you can see it in the yields, because despite the inflationary data, yields dropped, which signals to me that if the Fed doesn't say anything, or doesn't come out, or doesn't raise interest rate, then the market is interpreting this as, okay, we're done. And because we have the war now factored in, it came into the play. Now the market participants even think, there are rumors that they're speculating that the Fed has to pivot soon. They have to cut interest rate this year. Now the meeting minutes in the FOMC came out yesterday, but bear in mind that it was taken a month ago when there was the last interest rate decision. And by that time, there was nowhere near, or there wasn't even a speculation about any war. So it's kind of like overwritten in the last few days happenings. But long story short, the yields are representing the interest rate expectation, and as you can see, now the yields are back below the year-to-date high, meaning, and also bear in mind that yesterday we had the inflation data, the PPI, which was completely ignored by the market. So that tells me that the market is not expecting more interest rate increases unless we have a significantly high CPI, unless we have more escalation in the war, unless the Fed comes out from its cave and announces that, hey, we still here, high interest rates and inflation, so get the fuck back from gold bubbles. It's as simple as that. Gold is absolutely unstoppable. I did enter into a cheeky buy on the top, but it was only like one lot, so nothing crazy. But as soon we get closer to the data release, of course I have to close down some of the positions. Actually, I'm gonna do it now.
Juicy profits, brother. Congratulations, man.
And look at you look at the lot sizes.
Yes.
It's nothing crazy.
This is the power of hold the positions, Tamas.
Exactly.
Sometimes very difficult for me.
Yeah, I know. I asked the wife. Just joking. So yeah, it's nothing crazy. I mean, many people think that you need to have huge lot sizes, and but you don't. You just need to get in the right time in the market, which is not easy. I mean, I wish I could say it's easy. Everyone says like buy low and sell high. This bullshit. But the thing is that I think the most important is first, preliminary, you have to understand the underlying market forces, macroeconomics, yields, monetary policy, geopoliticals, and all of these combined, and then, only then, look at the chart. There's no point looking at the chart if you don't understand what is the summary of economic projections, if you don't know what is the dot plot, if you don't know, every single time I have an alert on Financial Times and Bloomberg. If any article comes up with the name Jay Powell or Fed or FOMC or interest rate, I have an alert and I read it immediately because it's important.
Hi, Thomas.
Hi, Asal. How you doing?
Good, thank you. Sorry, I have a question. Today in the morning briefing, you explained about PPI is leading and CPI is leading. I couldn't find details about CPI in investing.com where I can get more information.
The CPI, let me switch to my browser.
Thank you.
A CPI, obviously, if you have the economic calendar, you go to today's date, which is Thursday, 12th of October, and then here it is, CPI. You have core CPI and you have the headline CPI.
Yes, I'm watching.
Okay, so Asal, do you know what's the difference between core CPI and headline CPI?
As you explained before, core means including food and energy.
Excluding.
Yeah.
Exactly. So, because those are the two most volatile items, and if you add it into the calculation, into the formula, because it's very volatile, the standard deviation, so the movement in the price is so great, but if you exclude it, then the volatility becomes much smaller. So yeah, the standard deviation in statistics. So you get a much smoother average if you look at on the longer term. But of course you have to include that, because it's, you know, everyone spends one way or another on food or fuel. So which one is more important, you think, core CPI or the headline CPI?
I think headline CPI.
Is it because it has 3 stars?
Core CPI.
Oh, no, core CPI. Yeah, I'm right. Yeah.
Yeah, actually both of them is important, but as an economist I prefer the core CPI for many reasons. Obviously because fuel and food is quite volatile, but core CPI, the same as initial and continuing jobless claims. And actually, oh shit, we have initial and continuing jobless claims as well. Oh my god. Now this today is going to be pretty hard. So how about we break down and come up with an analysis? We have 27 minutes to do it. Can we make it? Can we do it?
Of course,
Yes,
of
you
course.
can.
Okay. Do you guys want to do the analysis, or somebody wants to help me?
I think we need unemployment claims lower. That would benefit. If it's less than the forecast, then
Let's start with the CPI. Sorry, because we were discussing CPI. So if we have CPI today, what's your name? Sorry, because I see PR. Is it Ramirez?
Yes, Ramirez. Yeah.
Okay. The CPI is an inflation indicator, right?
Yeah.
And the monetary policy is highly dependent on the inflation gauge, which is the CPI as well as the PPI. Now, if you have a look on the yields for the past 22 months, the Fed and every single central bank in the whole world have been fighting inflation rigorously. You can see where this is where the yield started to rise. So this is where inflation was at around 5%. So naturally, if we have high inflation and we have high interest rate, right? Because the higher the interest rate, that should, in theory, reduce inflation, because that limits the money circulating in the economy. It demotivates people to take out loans. It demotivates companies to invest in capital expenditure, for example, to buy new machinery, to hire. Households are going to have less disposable income. So higher interest rates are higher inflation equals higher interest rate and lower gold prices. So from this, Ramirez, if we have higher inflation data today, so for example, if we have 0.5 on the core and if we have 4% on the headline CPI, what do you get out of this if you have higher interest rate, higher inflation rate? Does it equal to higher interest rate or lower?
I'm lost.
Higher, right?
Yeah.
So inflation was going up.
Yeah.
Exactly. So now we can start looking at the gold chart. And by the way, inflation interest rates are creeping a little bit higher, back to the year-to-date high. So from this perspective, we can get this analysis. If we have a higher CPI, which equals higher interest rate, this is the formula now at the current interest rate environment. If we have higher CPI reading today, then it's a gold sell, right? In theory. Remind you that yesterday the market completely ignored the PPI. So not sure if it's going to happen today with CPI, but yesterday PPI was a big surprise. Despite the inflationary data, gold just pushed higher and higher. We had a bit of pullback. That was the entry yesterday, and we made 100 pips. But in theory, if you have higher CPI, that should push down gold prices. And this, if we ignore what's happening in Palestine and Israel in the Gaza Strip, so that should be equal to higher CPI. Let me just color this into a nice red. If you have a lower CPI, that equals... What does it mean, Ramirez, if you have a lower CPI?
Lower CPI is deflationary.
Deflationary, exactly. Why is it deflationary?
Because it means that prices are going down. Is that what it is for the consumers?
Exactly.
In this case?
Exactly. So the prices aren't rising as much as they did before.
Yeah.
And also it could be a sign of a cooling and contracting economy, which is good, very good at the current interest rate and inflation environment. So this is it. Higher CPI, which is inflationary, would naturally bring higher yields or high yields for longer time. Lower CPI is a buy on gold. Now, currently gold is just way too high to buy, way too bullish to sell. But academically speaking, this is how gold should react. I'm gonna go back to my live.
Sorry, am I right in saying that we're not expecting prices to go down?
On gold price or what prices?
No, on CPI, core CPI.
It's hard to tell. I mean, inflation has been normalizing for quite a few months now, in the past 6 to 8 months. So, who knows? This is something that can bring a surprise. And in the meantime, I'm closing down some profits. Actually, the 0.5, I'm gonna close down some more. Yeah, the rest can stay. No, actually, that one lot at the top, I'm going to close it down. Okay. So, what do we expect for CPI? Let's have a look. First thing you always want to do is have a look what the analysts are expecting or forecasting. Now, in investing.com, the core CPI is set to be no change. So it's quite inflationary, right, Ramirez? Or deflationary?
Deflation.
It's like there's no increase, no decrease. Which one is it?
Yeah, I think it's deflationary if it stays the same.
All right. You think it's deflationary. What about the headline CPI? What about the headline CPI? Yeah?
When there's no change, I think I usually hear you say that we'll continue with the same trend.
Mm-hmm.
Is that what we're going to do in this case?
Yeah, but that's for the gold. So that's the opposite, the asset that we trade. And now we're talking about the meaning of the interpretation of the actual results. It's not the continuation of gold or not continuation. It's the how do we interpret the forecast.
So if core CPI stays the same, we look at CPI, right?
We can do. What about CPI, headline CPI? The forecast is set to be 3.6 versus 3.7. It's inflationary, isn't it?
That's inflationary.
It's very inflationary, isn't it?
And yesterday's PPI was inflationary as well, very inflationary.
But is this inflationary, the forecast? Does it show
Yes.
you an increasing
No,
trend?
That is deflationary. Slightly,
Deflationary,
yeah.
right. Insignificantly deflationary. It's very on the line, like it's almost nothing, like a 0.1% decrease, like fuck that. Oh, Sam is here. All in, Sam. Hope you recovered the losses from last time.
Correlation to from CPI to PPI yesterday? Because if manufacturers have to pay more.
There is, but it's not like I think it takes a few months to see that effect, 2-3 months minimum. So we have core CPI no change, headline CPI a slight decrease. So how do you put together these two numbers, and what do you think? Put your hands on your heart, your economist hat on. Is it an inflationary forecast, deflationary, or there's not significant change? It's just the way it was.
Yeah, not significant enough, I would say. Especially in this market.
And what about, okay, so we done this analysis. We couldn't really figure out, like, okay, is it inflation or deflationary? Yesterday, the PPI was inflationary, right?
Yes.
So how come that gold market just pumped higher and higher despite the inflationary data? What does it tell you? How do you interpret this?
With the market is the sentiment, isn't it?
Yes, exactly, market sentiment. And what does the market sentiment tell you?
Because there's uncertainty, they're looking for things like gold in this case. Or
No. Don't go into safe haven.
Okay.
Don't go into safe haven. Don't stretch it. So yesterday we had the PPI data, which was very inflationary, and we did the same analysis. Inflationary data, we should have sold gold, but instead I was buying gold, and I actually still hold the position from yesterday. Why did I went against my analysis?
It's because of the war with Jerusalem. Israel and Palestine, and that took over. So that means the technical aspect and I forgot the other word doesn't mean not so much anymore because of the war, and the war is taken over. And I think it's that kind of thing.
One thing, yes, the war is correct, but was it the war or the effect of war on monetary policy?
I think the effect of the war.
The effect of war on monetary policy, because during wartime, during hardship, economic hardship, and during economic turmoil, the Fed usually does not raise interest rate. In fact, the Fed usually cuts interest rate when there is a calamity on the markets or in geopolitics. And when I looked at the price action yesterday, it did drop like 73 to 70, like 30 pips. Let's call it 40 pips. I was like, hold on, that was very inflationary data. The market, however, didn't drop 100 pip immediately like it usually does. So I was hesitant at the beginning after 2 or 3 minutes, but then I was like, okay, let's buy. Because what I thought is that the market, and this is where market sentiment comes in, the market and the market participants thought or think, that's how I interpret it, that I think that they think that because of the war, the Fed will be cornered and will be forced to start cutting interest rate, i.e. pivoting. And 200 pips later, or 135 pips later, the theory was correct.
Mm-hmm.
The market right now is pricing in the probability that the Fed is going to pivot because of the war, Chango. You said it correctly, because of the war. So the war is the effect of the war, not the war itself. Yeah. The question is, will CPI today going to have the same effect or not? Should we buy or should we sell? Someone tell me, put me out from my misery.
Yeah, difficult to say, man. Difficult to say because that is not a question at this moment, and because of, you know what, the at this moment you have a lot of news, and that will affect the market in somehow. So this is I think it's a difficult day today because of the data. It's too much data. I think.
It is too much. Oh, you haven't. We didn't speak about the jobless claims.
Yeah,
Damn
yeah,
it.
yeah.
You see how difficult it is to.
If we
That's
factor
right.
in
Too hard.
factor in the jobless claims and finish our analysis and then observe how the price reacts initially to the release of all the news, then perhaps like yesterday, we can see if there is a discrepancy between the behavior of the price and the data that we have, and then we could make a decision.
Yeah, but yesterday you had I think yesterday you had only one event, and now it's I think 4 events. That will make it harder, I think. Yeah.
Ali, yes, you are correct. We should finish the analysis, factoring in the jobless claims. So thank you for volunteering. Now let's get down to analysis. If we have, first of all, what's the difference between initial and continuing jobless claims? Ali?
I don't know the answer to that yet.
The difference between initial and continuing jobless claims is that initial measures the people who claim unemployment benefit for the first time. That's why I say initial. The continuing measures the number of people who claimed unemployment benefits for 2 or more months. So effectively they are considered as longer term unemployed people as opposed to initial. Which one is more important, Ali? Initial or continuing?
I would say initial because it signifies that more people are losing their jobs or not finding jobs and having
what
to
about
resort.
people? What about people who are in between jobs and let's say they just claim benefit for a month? They go on holiday.
I didn't know people do that.
They do. It's called actually the natural rate of unemployment in economics. Investing.com marked initial jobless claim with 3 stars and continuing jobless claims with only 1 star. But as an economist, for me, continuing jobless claims is more meaningful because it tells me the strength of the job market. Is the job market able to suck up the excess amount of unemployed people easily, like this? Or it's not, and people stay in unemployment for longer term? Because if initial jobless claims goes up, but continuing jobless claims goes down, that means that the job market is significantly strong and able to suck up the excess unemployed. That's why continuing jobless claims has more meaning to me.
That makes a lot of sense. See, it's these things that only someone who studied economics would know, because it's so tricky just the way it looks on the surface.
Yeah, they try to confuse you with all of this data. It's manipulation. So, Ali, the forecast today for initial, an increase and continuing to increase. So both pointing into the same direction, which is?
Inflationary.
Sorry, say that again?
So both of the data, continuing and initial jobless claim, pointing into the same direction, an increase in unemployment. A claimant count.
Yeah, so that would be bad for the economy.
Is it inflationary or deflationary?
Deflation.
Deflationary, exactly, deflationary, because, and we have 9 minutes left, so it's deflationary because if number of people going into unemployment, that means that they're not going to get salaries. So the disposable income of the households are decreasing, so it's deflationary. So if the jobless claims is decreasing, sorry, it's increasing because it's deflationary, then it should help gold to go higher. Right?
Correct.
The opposite, if we have lower jobless claims, that means that the labor market is strong enough to suck up all the excess unemployed people, so they don't have to be in unemployment for long term because they can find a job. And currently, let me remind you, in the United States of America, currently for every single unemployed person, there are 2 jobs available, 1.8 jobs available. So this is it, guys. Here we have the full analysis. You did it in less than 6 minutes.
That's
Well
great. We have the analysis for the data if it's aligned. So, for instance, lower CPI plus higher jobless claims, or higher CPI plus lower jobless claims, and we usually also add the mixed data
I
possibility.
would just stay the hell out of the market if it's in line with expectation, because then the market will decide. So what and also important to tell or say that I would only go with this analysis if we have significantly great deviation from the forecast and from the previous data. If it's in line or close to, I would just wait. But even that, today is the first CPI since the war broke out between Israel and Palestine. So we have to be very, very, very careful because we want to see how the market is going to react. Yesterday, PPI, against every odds, did not shake the market. In fact, the market just shook off the inflationary data. Whew, a lot of talking in it. So I have a few runners, but I'm not entering into any other position. I'm just going to leave these ones. If I see the market is going down, just going to close it down and look for something else. And those of you who are not following me on Telegram, I'm sending the link into the YouTube chat. Follow me. I do send daily wisdom to my Telegram, sometimes pictures about me drinking coffee. It's very informative. And now we're just patiently waiting for the result of CPI. 6 minutes. Does anyone have any? Does anyone have any questions about the macroeconomics and fundamentals that we just discussed?
No. Seems getting clearer every month, I would say, or weeks.
Nice. So you didn't regret joining?
No, definitely not. No, it's helping me a lot to understand, and as I said before, these days I'm a little bit more clinical when I enter into any trades and when I get out as well. And even if I lose, I know exactly why, and then to not repeat the mistake next time, I control my emotions, I would say. So yeah, it's very good.
Thank you very much. Full margin sell. Everyone is selling. US dollar is actually getting stronger. Morning, Ricardo. The yields. Let's have a look on the yields. The yields are actually increasing, so there might be an opportunity for the short sellers. But yet, yes, yields were dropping yesterday and gold was going up. So it's no longer relevant, or actually today is maybe not that relevant. I have a question about your entries. How can we get these sniper long-term entries? Who wants to answer this question?
Join the community, brother.
Yeah, boy. I do share all of the signals and analysis right there with my MetaTrader screen, so you can actually copy those trades. And by the way, I'm holding these trades, and these are runners, so these are not the full positions I entered. These are runners, so it was like 5 lots and 2.5 lots, but most of them are closed down already and booked a profit at the beginning of the stream, so it's good money. But you know, as soon as it reaches like £1,000, I tend to close it down and lock it in. I mean, if someone gives you £1,000 or 500, what would you do? Would you just stare at him and like, or take the money?
I'll stare at him until he starts taking the money.
Yeah, that's what most people do in the market. They get robbed in daylight, broad daylight, and they just stand there doing nothing when they see their position is going in a loss, and they just let them rob themselves.
I wanted to ask if you were ever like that in trading. Like, do we get to know the backstory?
Oh yeah. Everyone is similar. Everyone goes through the same phases. It's because of greed. Like, oh, I place this trade. If it reaches my target, which is some ridiculous, 1,000 pip, then I cash out 10,000. And people have these second thoughts. And what if I hold a position? But how are you sure that that position is going to go in your favor for days or weeks, even hours? Look at the NFPs. Usually NFP goes both direction, 200 pips within minutes. But when we have clear macroeconomic view, long-term strategy, it's easier to trade. Of course you get the pullbacks, but then if you know the macroeconomics and fundamentals, pullbacks are just another opportunity to enter.
The thing with macroeconomics is it's really like learning another language, and sometimes like when you're speaking about the different concepts, it's almost like I said, like learning a new language. A lot of the words haven't registered or settled in yet into the paradigm, but like one of our friends in the team was saying, it really does get clearer with every session that we have, actually with every day on the Discord. And it's almost like starting to become a little more fluent, and then the entries make sense to answer the person who was asking, I think, in the YouTube live.
That's because you are surrounded with people like myself who speak economics, and I use the same terminology and lingo. I show you daily Financial Times article. I send it to Discord. If you don't know, go to daily reading. I ask you, I push you to read these documents. These, by the way, 30 seconds. And this is, it becomes, effective. By the way, we get back to this. We have 22 seconds. If you see the CPI data, please shout it out. We have 15 seconds to go. Gold is edging higher, front running already with the lower than expected forecast. We have 8, 7, 6, 5, 4, 3, 2, and 1. And the data is coming out. Oh, that must have been very inflationary. 3.7, fucking hell. 3.7, 4.1. Okay, so it's inflationary. Let's have a look how the market is reacting. I'm actually going to close down. I already closed out. The market closed me out from that position. So I'm going to take some profit more, but not entering into anything. Let's see how the market is reacting. If it breaks the structure, then we're going to continue down. This is quite inflationary data.
Yields have gone up, rocket up by quite a bit.
Not much, to be honest. It's like only 0.1. The market is going to shake it off. Same as PPI yesterday. Who's brave enough to enter into buy?
Let's go.
I am.
I'm not. I'm just asking. Oh, have a look on the unemployment claims. Quickly. Don't rush into anything, guys. You don't need to stress out. Initial, in line with
209.
expectation. Wow. Continuing has increased. So that's deflationary. So we have a bit of a mix-up in it. One of them is deflationary, the other one is inflationary.
Down.
I think it's time to go down now. But the market hasn't dropped yet. Let's enter 2.5 lots because of the because of the inflationary data. Let's enter into sell. And accidentally I pressed 24 lots. Fucking hell.
50% போடல ஒரு 0.50 அந்த மாதிரி தான் எடுத்தோம்.
Okay, that one is closed down now. Damn it. 24 lots. No, I closed down the wrong one. Shit. Up. Have you seen it?
Yes.
Oh my god. It's a rookie mistake, I know. But yeah, but luckily I managed to make a grand on that. Because I wanted to enter 2.5 lots and I entered 24 point something.
My god. Bro. Crazy.
I look forward to the day where my mistakes make me a grand.
£862 to be accurate. I'm gonna close down the other. Should I close it down? It's so nice.
Thomas, just I checked the news. Israel attacks Syrian airport. Does it make any change?
Yeah, unfortunately it does. It does. But I'm gonna stay in sell, ignoring what's happening in Israel and Gaza, and just focusing on the data. The 3.7%, I mean, clearly inflation is very stubborn. We have jobless claims, bit of a mix-up. So I'm gonna stay in the sell. It's yields have increased, not much. I'm gonna stay in this sell for. That's maybe targeting 1871. I think that's reasonable, 90 pips. But of course, yeah.
Well, if we look at the data where we have a mixed data, and we see that the inflationary data come outweigh the inflationary data. So is it also based on that we decided to take this trade to sell?
No, I flipped the coin. I flipped the coin and it was a sell.
No, what I'm saying, Thomas. Okay, for example, we have continuous jobless claim to be deflationary.
Yeah.
Besides that, all of the other data are deflationary.
Yeah.
So we see that the deflationary data kind of not with the deflationary data. Is it based on that we decide to sell?
Yeah, I looked at the CPI and the this time the headline, because there was not much change in the core CPI. Okay. So I looked at the headline CPI. And the other fact is that because gold has increased so much in the past week, whole week, so I'm expecting a bit bigger pullback, let's say. So it is time now for some profit taking, but I could be wrong. Who knows? And yet the market doesn't want to drop. Same as PPI yesterday. Similar to PPI yesterday, not the same. This is not a long-term sell, guys. This is a short-term intraday, just, you know, in and out, make the money, take the money. If it comes down to around 72, 71, I'm going to close it down. Walk away with the money. Just doesn't want to drop. God. Nah. Come on, boy.
So if we turn to the yield, we're going to find out that yield will be increasing, right? Because more often yield increase or go kind of go down.
What the yields? You're asking? Yeah, it came back into close to year-to-day high. So the position is running in a whopping 10 pips of profit, ladies and gentlemen.
Pip pip, hooray.
10 pips, oh my god, fucking sniper, innit? I mean, 10 pips is more than some people makes in a whole month.
Yes.
Not being cocky. It's £132. Check. So, 15 pips of profit. Ladies and gentlemen, I hope your positions are going well. If someone would like to join the Alpha community and get daily morning briefings live with me, with macroeconomic analysis, with entries on with my positions, where is it? Like this one on the screen. So I share my MetaTrader, the full analysis. I actually explain what's happening on the markets. You can do so by going to alphafx.eu. You can see that everything is shown. You can go to alphafx.eu and join the community.
And get to trade with the Godzilla of trading.
Godzilla of the trade. How you doing, Tez?
I'm good. Just on a break, see myself in profit. The buys from the morning hit TP. Thank you very much.
Very nice. Cash. Tez, do you hear this?
Every day.
Yeah, boy. No, well, not every day. We do have stop loss hits as well. But I think trading the data, which is the most difficult for people with Lamborghinis and McLarens and Ferraris, for us, it's easier, innit? Kevin Victor, Thomas, can you show more on the part you share your trades on Discord? Of course you can, brother. What do you want to see? And feel free to ask questions. There's 200 people in the Zoom. Everyone can say. This is what I share. Oh, 24 pips of profit. How nice is that? And suddenly the Zoom just went absolutely quiet.
Just enjoying the view.
Not good to be too greedy.
We're making money, baby. We're making money.
I catch this one.
Nice.
Sir, I have a question.
Yes, Aman.
Thank you so much. Can we apply Fibonacci retracement here because it's a good movement and I am expecting to reverse the price?
You can apply whatever you want, brother.
I mean to say, As per your lectures. I always, when I miss such type of trades, I always apply Fibonacci, and 80% of it works
Ah, you mean the
properly.
retracement? Yeah, yeah, yeah,
Yeah,
yeah.
exactly.
Let me show you how to do that. I'm here to help on your side on a daily basis. This is the Alpha FX. So when you have a beautiful structure break, such as this one, and if you missed it, nothing to worry. You can use one of my best tools and my favorite tools I use religiously, which is the Fibonacci retracement. All you have to do is identify the nearest trend. You can see that the trend has been broken, the structure has been broken, and I have to move my TP because it's going to hit. So all you have to do is identify the trend. Once you identified a trend and the structure break, you need to have the Fibonacci. But you need a lower bottom to the Fibonacci. The top is clear, but you need the lower one. Where do you put it? Well, where it starts to fucking retrace. So you have to go down to lower time frame, and when you see that price is coming back slowly, you identify the zone which is most likely to be the retracement zone. There you go. This is how I use the Fibonacci in retracement. And the position is running in 42 pips profit. Even with a late entry, we managed to make some money today. I'm gonna close down the previous buy, and actually I'm gonna just book profit on this one. 2 lots. I'm going to close down 2 lots. Make the money, take the money. 40 pips is better than nothing. I'm going to leave 50 cents or half a lot running. Exit strategy? I exited already.
80 pips, taking half the money.
Very nice. The fuck is this shit music? So, Kevin Victor wants to know if he wants to copy my trades, can he?
No, sir.
No, of course he can.
Yeah, but Thomas, the thing is, if you have the concept, because like sometimes you kind of get sick or you kind of travel, and then we are left on our own. So it's better you kind of learn than to just kind of copy.
Yeah, I mean, you guys, I share the MetaTrader screen wherever I enter in Discord, and I trust that you can read. So here's the stop loss, the TP, everything is there. Can you see it? Oh, guys, we need to do some fundamentals. Yeah, sure, you can say anything you want, but there.
Yeah, Thomas, I just want to appreciate you, you know. Yeah, because over time I've learned a lot. I've done my own studies. I've been through the daily webinar, and it has really uplifted my mentality when it comes to trading. So in this light, I just want to appreciate you because from the knowledge your impact on me, it has actually made some financial changes in my life. So I just want to tell you thank you.
It's probably the
Good job.
nicest words I've heard this week. Thank you so much, George.
Okay, I'm already.
So, those of you who would like to join the Alpha community, there are a limited number of spaces left. We have 2 Pro, 2 Premium, and I think some people are just signing up now. Click on alphafx.eu and you can join the community. Let's hit the refresh here. Oh, there's only 3 left. Who made some money today?
Hell yeah.
Maybe later.
Thank you for the live sessions. You're welcome. What is the open trades indicator called? If you look at on the left hand side of the screen on MetaTrader, it's called Blue Digits FX Open Trades. Okay, I think the retracement is now starting, so it's good time, if you haven't already, to book some profits. I'm gonna close the trade and maybe look for another opportunity to enter, but for me that was enough for today. I think that was a good day. The whole week was actually quite good.
Hello Thomas, how are you?
Hello Tuku, how you doing?
Just coming back from work.
Tuku, can you help me? How come there's only 170 people like the stream when I'm giving out free knowledge?
Not sure, just join in.
God. Anyway, guys,
actually, maybe the timing is so different in every country. That's also the best of the thing. Maybe people wants to join, but the time is like me. When I just returned back from work, I just start to stream online. Sometimes I don't have any time, whatever. But at least I get your analysis, and I get some profits. Very nice.
Nice.
I like it a bit. Yeah. I heard last 5 minutes, and I think the fundamental are breaking out, and we get some profits.
Nice. I'm gonna go offline now. We done 60-80 pips on gold. Broke the structure. I'm not 100% sure that it's going to continue down, so that's one of the reasons I pulled out from the position. Remember that this week is not normal week. We have the siege in Gaza. Many things affecting the markets. Looking at the yields gone up, but now bounced back off from the year-to-date highs. So it's a very strong support and resistance level. So we're back to the no man's land. And honestly, I don't want to trade this area right here because I want to see a clear break to the upside or the downside. That said, thank you so much, guys. I'm going to call it today. It was actually, again, another successful day. I hope you enjoyed the stream. And see you all tomorrow for the team members. Thank you so much, guys. Have a good one.
Thank you, brother. Goodbye.
Thank you, Thomas.
Bye, Thomas. Thank you.
Bye, butterfly.
Thank you, Thomas.
You're welcome.
Thank you, Thomas.
And those of you who would like to join the Alpha community, there's a few memberships available. I do daily morning briefings live, so it's not like some recorded crap. I explain everything from a macro and fundamental perspective. Join the Alpha community. Thank you so much, guys. This is the Alpha Facts.